To say you gotta know somebody, or know somebody to get somewhere these days. To say you know that's alright, yeah that's alright, cause you know that's alright with me. Yeah, you know that's alright, yeah that's alright, cause you know that's alright.
What we're gonna teach you is how to buy properties with none of your own money, without the support of banks. You don't need stinking banks, okay? You're gonna get to keep the properties. Meaning that you're going to be a buy and hold investor. You're going to keep them. You don't have to flip them. You don't have to wholesale them to make money. Okay? And sometimes you can even get paid to buy them. I'm not even going to go there until later on tonight, because people who don't believe that you can buy property with none of your own money definitely don't believe that you can get paid to buy them. And we're going to give you some ideas tonight. Alright. The first one is really simple. You're a real estate investor, you find a great deal, okay? But you don't have any money, okay? Or maybe you do have money, but you don't want to use it. You're crazy enough to think that what I'm telling you is true. You're going to buy it with none of your own money. So, first thing you got to do is you got to find people who have money. Trust me, there's plenty of people out there that have money, all right? And I tell people all the time, attitude is everything. You got to have a good attitude about what you're doing. You got to be excited about what you're doing. You got to know what you're doing. Right? You got to talk to everybody. So you go to real estate meetings, you walk around, you meet everybody. You constantly, you have to be a social butterfly. You have to get your name out there. Hand your business cards out to everybody. Now, if someone comes up to me and says, well, what do you do for a living? I could say I'm an author, I could say I'm a real estate, I could say a lot of things. I'm a real estate investor. But what I really should be saying is, hey, Phil, what do you do? Well, I raise private money for amazing real estate deals. Boy, is that a great conversation opener? You raise private money, what's that? You know? Great real estate deals? What's a great real estate deal? And it opens up a conversation for you to immediately start talking about what it is that you do. And here's the beauty of it. You don't even need a piece of real estate. All you need to do is find somebody with money. Let's just say, for example, that Brian in front of me he uses that line next week at a party. And he meets somebody who has money, and they could be a potential private investor. I have real estate deals. Brian can get my business card on that table on his way out of here tonight. He can call me up and go, hey, Phil, was at your meeting last week. You said that if I found somebody with money, I could couple that money with one of your real estate deals. And if he did that, I would pay an interest rate to his private investor for being a bank on the real estate deal. I would give Brian 1/3 ownership in the property deal that I put together just for making the relationship. He doesn't have to do a single thing the rest of the deal. He's 1/3 owner of a piece of real estate just because he knew somebody with money, okay? So what I do is I go out, and that's the way I talk. I raise private money for amazing real estate deals. And when I collect people's business cards, I don't just take them home and stack them up, okay, forget about them. I enter them into my computer, and I happen, it depends on what contact program you use. I use, a Gmail, and I put them in my Gmail, and I write down real estate investor, realtor, private investor, okay? Keep track of that stuff, right? Why is that important? Because I forget about all these people that I met, and then 6 months from now, I got a real estate deal, and I need to raise money for this real estate deal. All I have to do is go right back to my Gmail, and there's all the people I know who I've categorized as private investors. And I put little notes in the contact of the kind of people that they are, where I met them, what we talked about, so that I can remember who they are. And when I call them up, I'm not just like a stranger. I do remember the conversation. At least I wrote it down. A short pencil is better than a long memory, what I always say. Okay, so a great place to get private money is from people who know you, like you, trust you. And the easiest place to find those people is right here. Right here. Not my cell phone, your cell phone. Someday you should just try this. Sit there and, I don't know, you got a couple hundred contacts in your phone. Start flipping through the names. And take your time when you're doing it. We're not looking for millionaires. You're not looking for that. You're looking for somebody who might have 100 grand or 150 grand. And maybe they're not comfortable with the stock market right now. I know I sure as hell wouldn't be. All right? The stock market's had a great run-up, and debt levels in this country are beyond any comfortable level I want to see. And Europe is half on fire and half ready to go to war. I don't know how anybody could trust the stock market right now. Real estate to me looks like a much, much better investment for anybody who wants something that's cheap and heading up and safe, okay? So that's a great conversation piece to have with some of the people in your cell phone, and just talk to them about it. They already know you, hopefully they like you, and hopefully they trust you. So you got the battle already won. All you need to do is talk to them about what you're doing. It helps to have a little bit of credibility for yourself, Go to real estate meetings so you can talk intelligently about this kind of stuff. Read books, all right? Part of the reason that I wrote my book is I wanted to share my ideas. The other part was I wanted to build up credibility for myself. I've been in this business for over 2 decades, but when you have a book, sure, that helps, right? So do things like that build up your credibility, and your ability to raise private money will get easier and easier, right? So let's keep moving on. You gotta have strong real estate deals too. So you meet some people who've got some money, and you've had brief conversations with them about how this is going to work. And for those of you who don't understand how it works, let me give it to you real quick, all right? A private investor, a typical private investor deal, somebody might give me $100,000 to buy a piece of real estate. And that piece of real estate, when we borrow money off of somebody, a private investor, we structure amazing deals. So if I need $100 grand to buy a piece of real estate, that means I probably bought the house for maybe $80 grand. And it maybe needs $5,000 in closing costs, and it needs $5,000 in work. So what it really needs is 90 grand. Now if you went to a bank and asked for 90 grand, but you bought the place for 80, the bank is going to give you 80% of the 80, right? But as I'm dealing with private investors, I don't have time for banks, I don't care about them, I don't want to work with them. So if my deal is strong, and being a professional real estate investor, I pride myself on making strong deals. That deal that I bought for 80 is really worth maybe 120, okay? So it's no problem borrowing 100 against a $120,000 deal. So what I do is I say to that investor, I'm gonna offer you 8% interest-only payments on your 100 grand. And they're gonna get a first position mortgage and note secured against the property just like a bank would. And I'm gonna make payments to them every month for $666. That's what 8% interest-only payments would be on a $100,000 note. So my client, the private investor, is protected. They got a note and a mortgage secured against the property for 100 grand, and the property's worth 120. They feel comfortable. If I don't pay them, they're gonna take the building from me, okay? And not through some long drawn-out foreclosure like a bank has to do. I'm going to put language in that paperwork to make it easy for them to take it from me. It's called confession of judgment. And I'm going to write right in there, if I miss 3 mortgage payments, this house is yours. That's only 60 days, okay? People feel very comfortable with that kind of thing, especially if the house is worth 120 grand. We just did a deal in Doylestown where the guy lent us, we left a lot of equity behind his mortgage. It was about how much, 100?
Bought for 80,
Yeah.
borrowed 130.
Yeah, and we still had 100 grand in equity behind it. This was a case where the private lender wants me not to pay him, okay? He wants me not to pay him because he can come and take the house, and he knows we're gonna pay him. There's no way we're not gonna pay him and lose 100 grand, but you get the point. It's a very safe deal for them. They almost want you not to pay them. They're totally safe either way, okay? That's a great deal for people. It's safe, they got nothing to worry about. They're making interest-only payments every month, and they're 100 grand. Guess what I owe them after the first payment? I owe them 100 grand. Guess what I owe them next year? I owe them 100 grand. Guess what I owe them 5 years ago? I owe them 100 grand. Their money is totally protected, and they're getting these checks every month. That's just one way to structure the deal. You can structure the deal any way you want, okay? So, if you find strong real estate deals, if you've made a great deal, you got the property well under market value, and there's equity above the amount of money that you need, it's easy. Now it's just a matter of meeting people, or Brian brings me somebody, and my job is to find great real estate deals. Sometimes he finds the deal, sometimes I find them, sometimes he finds the people, sometimes they're my deals and his money, his people and my deals. Who cares? It's people in the audience call us up, people we know call us up. Who cares where it comes from? What we care about is that everyone involved in the deal is happy. The lender's happy, we're happy, okay? And then we keep moving on. What we typically do is we lock up the deal first, and then we raise money for the deal. and we do our homework, okay? So we know everything there is to know about this deal, what the comps are, how much it's going to cost to fix. When the private lender sits down with me and says, Phil, how much do you estimate the repairs are going to cost? What are you going to rent this thing for? I don't just throw numbers off the top of my head. I show them. I did my homework. I know what they rent for in this area. I know what it costs to fix this thing. So the deal is key. If they see that I know what I'm talking about in relation to this particular deal, I'm going to get the money, okay? All right? So, let me show you how I do it. We have these forms that we call the private money placement generator form. And it's a very simple thing. We put it all together, and it's in our buyer's briefcase that we have out there if you guys want to check it out. And basically what it does is shows them comps of the property. And it shows them maps. You know, it shows them where the properties are. So here are the properties. Here's the 4 properties that are located around the subject property. And here's the comps, okay? And then we have, in this package, we have standard Q&A questions. We already know the questions that the private investors are going to ask us. We've been doing this a long time. We know what they're going to ask us, okay? So we put the answers to the questions right in there because we want this process to move easy and fast. And they read this and they go, yeah, I get it, you know? And, you know, we give them all kinds of public information on the particular subject property. So they can see, here's the property, this is what the square footage is, this is what the taxes are. They want to know those things. Even if they don't look at it, it makes them feel comfortable to see that it's there. And then what I do is I give them the story. If you're going to sell something to somebody, and this is a function of sales, you're convincing someone to lend money on a real estate deal that I own. They're not going to get to own it. The private investor doesn't own it. They're like the bank. They're getting mortgage payments, okay? They get a mortgage and a note. I own the property, okay? So, you have to tell them the story. It's not just about the numbers. The other pages give them the numbers. This is what it costs to fix. This is what you can rent it for. And all that stuff is good. I work the numbers into the story. But in these paragraphs, I'm telling them, hey, I'm looking at construction going all over this neighborhood. And you can see there's a lot of upward pressure on the price. So this property, why is that important to them if they don't own the building? Because they don't want to invest, they don't want to lend their money on a property that's losing value. They want to lend their money on a property that's increasing in value, okay? Because that makes their investment safe. So you have to tell them the whole story. Whatever it is that you love about this property, you convey it in this story to them with a little bit about the numbers, and you summarize it all, not too many pages, a couple of pages here. You summarize it all and you throw in some pictures. This is actually a picture of a house we just bought on May 1st. I almost need a pointer for it. If you can see this picture here, this is a $4.5 million building on Siesta Key, Sarasota. Here's the house we bought. It's in its shadow. We got it for $387,000. And we figure it's going to be worth $750,000 the minute we're finished with it. We're actually, we were on the phone for 2 hours today trying to get the construction going on this thing. But this is a house we bought for $387,000, and we raised all that money plus $100,000 in construction money, so we raised a little under $500,000 in cash for this piece of real estate, which we own, and we didn't put a penny of our own money, not one dime, okay?